Let's talk some S&P trader levels and dealer exposure with Kevin Green to start off our analysis here this morning. KG, what do you make of this response to the data? We got weak jobless claims. We got a little weak inflation, too. A couple misses.
Yeah, but we're holding up here, Oliver. So if we're actually looking at that volume chart to see the intraday levels, actually we are really testing the first intermediate area of support for the market. That 57.75 area is going to be key, and we want to be able to try to bounce off of that. Now, usually when we have these flushes in the morning, we have seen recoveries hitting key areas of support, buyers stepping in, and then we kind of move higher here. So this is actually, for the most part, actually a pretty decent setup to at least start the day for now, and we want to try to kind of once again kind of track higher here. The next area that I would be focusing on is going to be 57.45. That's going to be a key area as well. But once again, I think when you're looking at these levels, these new levels for today's session, we're holding up for now. Positive dealer pressure area is going to sit at around 58.30. So those are going to be the key areas for me that I'm going to be focusing on here in the near term and looking for some buyers to really step in. If we were really concerned about that number, we would have had an immediate flush when it comes to the E-mini S&P 500. We probably would have came back and tried to retest that 5,700 level pretty much immediately at the open, and that's just not the case right now. This is actually a pretty subdued movement for the economic data sets that we do have on the calendar here today, and I think it does set us up for a decent day. Now, a decent day could still be maybe even a flat day, but what you don't want to see is a reversal of 1% or 1.25% for the S&P 500, getting back into that range that we've been in for the last 2 weeks.
Okay. So as long as we hold up and within yesterday's big breakout candle, we're feeling pretty good?
Oh, yeah, definitely. I mean, you come back. I mean, if you really wanted to get tactical with it, you would come back and actually really retest 57.45. Actually, it's going to be 57.50. I'm sorry. You come back, retest 57.50, and have buyers actually stepping in and then making new highs after that. That's a breakout of that channel. Come back, retest, use that previous area of resistance as support, then launch higher. That would be like the technical setup that you would really like to see. But maybe we don't get down that far. So I think we actually are faring pretty well here to start off the day. And the positioning actually shows that. I mean, if you're actually looking at open interest, we moved some levels to the upside. Yesterday, the positive dealer pressure area was sitting at around 58.25 or 5,800. It's moved up to 58.25. The new key area of support right now is going to be 5,800. We obviously are below that right now, but just looking at the institutional positioning yesterday, that's how we were able to kind of readjust. That optimism is still showing in this market, and then that negative pressure area, or where you don't want to go to, and where we might actually find some areas of support. But if we flush through 57.45, would be your area of concern on the longer time frame if that's going to be matched up with volume. So this structure, this distribution for the open interest right now is still signaling bullishness. Yes, there are going to be some areas of resistance to the upside. We've been able to manage that, test it, and then push through.
Okay. The old trader adage of the bigger the base, the bigger the break. We had a pretty decent little base formed in that range. We were looking at in that 57. So should we expect kind of a launch pad? I mean, if we do that retest of the old range and then really get going, is that a big enough base to launch us? And what kind of levels? How do we expect maybe where we go to the upside?
I'm not sure if it's that much of a base that we actually did form. If we go back to that daily chart here, one key thing that I do take solace in here is that 20-day moving average. That's going to be in purple there, that purplish pinkish line. We got around 6 points away from that, and that's the first time in this 3-month cycle, if you look at this chart, that we came back, retested the 20, and did not break through to the downside on the 20. Every other time we either broke through and then found area of support on that trend line, and or we kind of flushed through a little bit here. So that's one area to say, okay, that actually is bullish. That means that trend line, that 20-day is still intact. That upper trend line, that white line is still intact, and we can kind of move higher here. I would say 58.25 once again is going to be your immediate area of resistance for right now. But if you even could get to 58.50, I mean, I would consider that a win. I mean, we have to also kind of just let's have a little bit of perspective with this. We're talking about 100 point, 125 point, 150 point moves in a matter of a week, inching higher and higher. This is still a really robust bull market here, and if the participation and the breadth is going to expand like we saw yesterday, that does give us a little bit more fuel to the fire here. If it's not going to be just led by a mega cap tech, I think that's better than just mega cap tech leading and then everybody else is just kind of meandering around these current levels. So I think it's a really decent setup. Once again, I don't think it's if you kind of look at it holistically, I don't think it's the massive base that was forming on the daily for now. A massive base would be more of like a month and a half or maybe 2 months worth of consolidation within a range, and then that's where you would have a massive rip to the upside. So continue to look at those extensions, but the levels that I'm kind of highlighting continue to stay intact here, and they've been proven to be for the most part solid over the last couple of months here.
All right. Good stuff. Thanks, KG, for the perspective here on the breakout and what to look for next. Good stuff.